Hello and welcome to The Quality Investor. With earnings season in full swing, I've been providing commentary on various businesses and their results. This is a way for me to see if my investment thesis on various stocks that I hold remain intact. Last week, Pfizer, ticker PFE, released their earnings, and it was a dismal yet expected earnings release. Earlier in October, Pfizer released a statement revising downwards their guidance for revenue due to much lower than expected demand for their COVID vaccine. But before taking a look, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. With COVID sales in free fall, Pfizer slashes revenue forecast by $9 billion and preps for major cost cuts. Pfizer has stepped up to the plate with an update, and its effects are staggering as the company has slashed its 2023 revenue projection by $9 billion. Pfizer now expects sales to reach between $58 billion and $61 billion, down from a prior range of $67 to $70 billion. Pfizer chalked up the most of the decline to a $7 billion decrease in its projection for sales of oral antiviral Paxlovid. The company has also cut its forecast for sales of COVID vaccine Comirnaty, if I pronounced that correctly, by $2 billion. Pfizer also sees earnings per share plummeting to between $1.45 and $1.65, down from its previous projection of $3.25 to $3.45. Soon to follow will be layoffs, as the company said it will launch an enterprise-wide cost realignment program, slicing $3.5 billion in annual costs by the end of 2024, with $1 billion coming this year. So essentially, COVID demand has fallen off of a cliff, and Pfizer is pretty much back to their 2019, early 2020 numbers pre-COVID. So basically their free cash flow revenue, all that's basically based on their original portfolio. So the question I want to answer is Pfizer still a good investment? When I bought Pfizer initially, it actually had nothing to do with the COVID vaccine growth or market penetration there. And I'll admit, I'm down a little bit in my investment, but my investment thesis was simple. My first point is that Pfizer is positioning itself as a leader in oncology, which is cancer research, with a recent acquisition of Seagen. Seagen is a leader in what is known as ADC technology. ADC technology is a promising therapy in fighting cancer. A very simplistic explanation is that it's like chemotherapy in that it kills cells. However, it only kills cancer cells, not healthy cells, along with the cancer cells. Note this article here, 3 trends in antibody drug conjugate ADC market. So when it comes to looking to the future in drug discovery industry, an important question to ask is, where is the money? Where is it coming from? Where is it going? And how is it being used? Pfizer's $43 billion buyout of Seagen earlier this year speaks volumes. Seagen is a major player in ADC technology, with 4 of the 12 FDA-approved and marketed ADC drugs using its technology industry-wide. Pfizer is deploying its financial resources to advance the battle against cancer, a leading cause of death worldwide with significant impact on public health, said Dr. Albert Bourla, Pfizer chairman and CEO. And another note on those FDA-approved ADC drugs, by the way, Pfizer currently has 2 of them through their subsidiary called Wyeth. So after the Seagen acquisition is complete, Pfizer will have 6 of the 12 patents. In this article here, Stockwatch, Pfizer scales patent cliff by pursuing Seagen deal, talks about the potential revenue this could provide Pfizer down the road. So we come down here, $8 billion plus in product sales by 2030. Seagen currently markets 4 drugs that generated a combined $1.7 billion in net product sales last year, up 23% from $1.386 billion in 2021. By 2030, Barron's has estimated Seagen's 4 marketed drugs will rack up a combined $8 billion plus in revenues. Seagen would bring substantial revenue and future growth to Pfizer's oncology franchise and help offset patent cliffs, Barron's added. Pfizer has been making good progress with its internal oncology pipeline, but mid-late decade patent exposure is significant. And I've personally seen the excitement about this new technology through my day job in data science. I actually do consulting work for Seagen, and so I work closely with many of the research scientists that are developing these drugs, and they all talk about how revolutionary this is for cancer treatment. So this is kind of a Peter Lynch play. I'm basically betting that Pfizer will be the leader in oncology, and this will drive 10% plus growth for them over the next decade. Pfizer themselves, they're projecting a lot more than 8 billion numbers. So Seagen planning continuing to progress well. Continue to expect Seagen to contribute incremental 2030 risk-adjusted revenues in excess of 10 billion and expected cost efficiencies of 1 billion without impacting current R&D programs. So at the moment, the numbers aren't very encouraging for Pfizer. However, if their investments and these R&D and this acquisition in Seagen pays off for them, they will be the market leader in oncology, and we as shareholders should see some pretty significant returns. So turning to the actual earnings. All right, so initially right on the top line here, we see revenues 13.2 billion, down 41% year over year. Now, one important thing to note here is 11.7 billion is in their normal operations excluding the COVID drugs. And that was actually up 10%. So really, like I said earlier, they're basically back to their 2019 baseline, excluding any COVID stuff, and that particular portfolio is performing well. But let's not beat around the bush here. In total, the numbers are down across the board, and they don't look good. I mean, when you're down 42% in revenue, your net income from operations are negative now. You have a negative net income. Earnings per share is 42 cents. I mean, everything's just completely fallen off a cliff for Pfizer. They're performing well below what they did last year. And year to date, 79% decrease in their earnings per share. I mean, nothing about Pfizer right now looks good or encouraging. And once I came in and updated my valuation for Q3, I was discouraged even more. So if we look here, we're looking at a discounted cash flow of $45.92, a dividend of $33.67, and an exit multiple of $35.49. So I do want to quickly point out how I did arrive at those numbers. And if we come in here and look at it, I'm basically projecting the low end of their guidance here for full year 2023 on the revenue and everything else. And even though I have growth projected in years 2 through 10 here, because of that massive drop from last year to this year, basically compound annual growth rate for revenue is flat. Our operating income's down 2%, earnings per share down 7%, and free cash flow is essentially flat. I am projecting the free cash flow margin to grow to 28%, which basically puts us at where their free cash flow was at 2019. So nothing really great here on the surface, and discounting all this back at that 9%, that's what gives us a $45.92. And after that, I put in a 30% margin of safety just because I want to make sure that this Seagen deal pays off. So I'm giving myself a very hefty margin of safety. And that at that level here, right now, Pfizer is certainly a wait. Now, I do have some in my portfolio, but I'm certainly not going to be adding more just in case that price drops a lot more, because I do think it will. And I will say this, from a dividend standpoint, however, Pfizer is not a terrible play. I mean, they're yielding at almost a 4% dividend. So that dividend, in my view, shouldn't go anywhere, and they're going to keep growing that, especially after they kind of flush out the extra expenses this year. Once they do their cost-cutting stuff next year, we should see some dividend growth. Really, that's the only reason to hold Pfizer right now. I would not buy in for a while, and I would definitely wait until that price falls a little bit more before even thinking about opening a position. So before we go, I do want to remind everyone that this is not financial advice, and I do own a stake in Pfizer. But with that, thank you for watching today's video. And what do you think? I really love the feedback, so please comment below. Also, please hit that like button. And if you found this info helpful, subscribe to the channel and join our community. Thank you and happy investing.